Tackle today, Justice Brothers, bringing you all of the charts, analysis, news reports that you need in a concise manner so that you're aware of everything happening in the market. Before we dive into a consolidation pattern that the S&P 500 is having a hard time breaking out of, I want to talk a few seconds about the Tackle Trading newsletter. We release this every Friday. It is a fantastic, in-depth newsletter covering, Matt, just about everything. You and I put together this newsletter. Tell me a little bit about this newsletter before we get started.
Yeah, every single Friday we release a newsletter to our community, and what our intention is we try to make sure our community is fully apprised of all the information that's coming into the market on a week in, week out basis, so that they can execute their trading systems and trading philosophy with confidence. Every single week we give a technical update. There's a video that goes along with the technical update. We talk about the earnings environment, what companies came out, the positive earnings, the negative earnings, so you can have a really good understanding of the earnings side of the equation. We get people ready for the market on a week in, week out basis. We always have, different articles in the newsletter to help people understand kind of that major news that's happening. We go through the sector rankings and we talk about what sectors are getting upgraded and downgraded. We make sure that people have an understanding of exactly what is happening. We talk about the economic landscape. It's a beefy newsletter with a chock full of a lot of information. We try to inform and educate on a week in, week out basis. And so if you're looking for a quite frankly, one of the better newsletters in the market, something that will both educate and inform every single week, definitely come over to Tackle Trading and check it out.
Yeah, I know we are both very proud of this work. Just one of the many reasons to be a part of this fantastic community. Matt, resistance is resistance for a reason. We're trading now in what is turning into a 2-week consolidation pattern, pretty tight range, still holding the 9 EMA. But this consolidation pattern can't last forever, but it lasted this week, didn't it?
It did last this week, and I was a little surprised at that. I thought we were going to get a little bit of more volatility after we got Nvidia's earnings report, and quite frankly, quietly, there's a lot of important names reporting earnings just today. DELL, MRVL, LULU, ULTA. Obviously, we had Nvidia, CrowdStrike earlier in the week. We had the GDP report. We had PCE here today that you're going to talk about. There was a lot of information that came into the market this week, and the market didn't budge. Resistance absolutely is difficult to break, but at some point you got to break, because at some point you have to give up this the 9 EMA here. As you can see, it's getting really tight. 9 EMA, which is obviously acting as a little bit of support, is right there at 558, 559. Overhead resistance 565. That's really tight range. We're talking about individual candles are kind of touching both ranges of support and resistance. You certainly expect a breakout or a pullback at this point really quickly, because the market can't consolidate in this type of a range for a very long time. Either one, the 9 EMA has got to give out, and you would be looking at pullback analysis at that point with support around 550, or two, you're looking at a breakout of 565 with momentum. So that's kind of the technical conversation going into next week.
Yeah, I mean, and technicals, I mean, that is probably one of the main stories as we head into next week, labor market week. We'll talk about that here in a second. NASDAQ showing a little outperformance today, but not a lot of change in the general feel for the NASDAQ. Are you seeing anything specific here?
The only thing I'm seeing is markets that are trying to test up and a little bit of relative outperformance on the NASDAQ, but you also had a lot of earnings come out on technology type names today that's having an impact on that. You're also coming from the lower point versus the S&P, but I think you're splitting hairs a little bit. You're kind of running on the same gasoline. Market's testing up. Market test up against resistance in the spiders. Market actually tried to confirm yesterday. Market is having a difficult time holding that bid this week. And that's a little bit concerning when you see the wicks test up and then come back down. Wicks test up, come back down. But overall, I do think it's an improving condition. You see it kind of a little bit choppy on the intraday. You're trying to get back up above that trend line. If you could have hold that, that's a pretty good situation on the NASDAQ. You tried to get above that trend line again today on the cash open, couldn't hold that bid, coming right back down. So market is having a little bit difficult time holding a bid, but you're also not too concerned as of right now, just given the fact that you're tracking a retracement here and you're waiting on some degree of confirmation. Once again, that confirmation on the spiders could be above 565. Confirmation on the NASDAQ, you're dealing with a little bit of a different pattern. So you're simply looking at the previous day's high saying, all right, confirm here, and then we got something to talk about. That's the conversation really technically, is the market's trying to confirm, cannot hold that bid right now, so it hasn't confirmed the bullish retracement here.
Yeah, I mean, market really feels like it's looking for a catalyst, something to excite it. Matt, the economic data today was reinforcing of the Fed narrative that we're cutting. Inflationary data came out right in line with expectations. I know one of my brother's favorite charts in the market is this chart he's showing right now, where basically the data just comes in line with expectations. Like it just nails it. He gets the biggest kick out of this.
Well, I get the biggest kick out of it because we try to make a mountain out of a molehill sometimes in the financial world and in the news in general, and that's credit to our wonderful media environment in America. But I was sitting in the lounge yesterday and we were talking about expectations for the PCE report, and there was a little bit of concern, and basically I just said, I don't know what everybody's a little bit concerned about. This puppy's coming in at 0.2 tomorrow. And
you said it in the lounge, and here we are, 7 out of the last 8 months, exactly in line with expectations.
Yeah, so don't paint me surprised on the 0.2 here today, because I think that was baked into the market here. So I don't think we're having a PCE conversation. I think we're having an earnings conversation more than anything today.
Yeah, absolutely. And next week is labor market week, where we have ADP data, unemployment claims, JOLTS report, and then, of course, the big one, the monthly unemployment report on Friday. Markets are closed on Tuesday, and so we're going to get a lot of economic data next week. Certainly can provide. I will be shocked if the S&P 500 is in this range. Either we're going to pull back or we're going to break out on labor market week next week. I feel very strongly about that. But while we're waiting for those macro stories to unfold, always going to have individual stock stories. As Matt said, a lot of earnings reports. Who are the 3 you're reporting on today?
Yeah, there was quite a bit of stocks in the news, and I'm going to do a little bit more than 3 today because I couldn't.
Do a little rapid fire.
I am going to rapid fire. I couldn't choose, so I'm just going to go down the list here today. And it was an earnings day, but we have a couple other news items to quickly cover as well. First and foremost, Dell Technologies did report earnings here today, and they had a pretty good earnings report as they come in with a 7% beat against EPS. Revenue beat the expectation by about a cool $1 billion. You also had 9% revenue growth year over year, and they increased forward-looking guidance. We're having a couple good conversations in the tech space regarding hat tricks being pulled this week. Dell also pulls off a hat trick, coming from the low point, looks pretty good on a potential breakout coming off that 200-day moving average is Dell. When you're looking at some other tech counterparts in the market here today, one I was anticipating a little bit was MRVL. And the question I had on MRVL was, can they create something here? Can they create some magic here and get into that conversation with some of those other high-flying semiconductor components? Because even though MRVL hasn't done much for the last year and a half or so, this is a company that can absolutely fly. From 2019 through 2021, this was one of the biggest stocks in the marketplace. Can they create some magic here? I don't know, as they come in with an inline expectations, 30 cents against 30 cents expectation. They had a 5% revenue decline year over year, but they did come in line with the actual number. They did increase guidance. So we're dealing with a little bit of a lukewarm mixed report here, but they did increase the range of EPS guidance. It was 35 cents for next quarter. They increased that to 35 by 45 cents for next quarter. So they do have some degree of confidence moving into the next quarter, but a tough technical conversation here as you did gap up above the above resistance, traded back down, definitely needs to go through a little bit of pattern development. Now, a couple concerning reports in my estimation on the health of the consumer, not necessarily the company itself, but we did get a couple companies report in the retail space as well, and 2 fairly large companies. Number one, you had LULU. LULU reported earnings, and they came out with a 4% beat against EPS. They did come in above the expectation, below the expectation on revenue, but 7% revenue growth year over year. They also decreased forward-looking guidance. A little bit of concern in the retail space, and I've heard a lot of criticism in a few earnings reports recently about the health of the consumer. I'm just going to say there's also been a lot of data points to go to the positive nature of the consumer, and I'm just talking from an earnings perspective.
Yeah, Best Buy yesterday, for example.
Exactly. For every Lulu you have that's lowering guidance, you have a Best Buy that increase guidance, right? And so it's one of those areas of the market that is a market in and of itself. And so I wouldn't take too much on the health of the consumer regarding what Lulu and Ulta is doing here, but it is a mixed environment from an earnings perspective and the health of the consumer. So Lulu officially lowers guidance. What about Ulta? Remember, Warren Buffett took a position in Ulta, and that's what resulted in the gap up situation just recently. But they have been under pressure from a fundamental perspective for a while now. Does Warren Buffett see something here? Was the question. Well, their EPS came in officially at a miss, negative 2% against expectation. Revenue came in underneath expectation, and they decreased forward-looking guidance. They are very lucky they have Warren Buffett on the board here, because I think this is a gap down situation a little bit more than what we are seeing in the market. Pretty nasty look from an earnings perspective coming out on Ulta, quite frankly. And then a couple other just quick stock stories very quickly. Intel is looking to do a little bit of reorganization, I want to say. Intel is exploring strategic options with investing communities out there. They're kind of going out to the banks out there, looking for some capital and looking for some strategic options on turning this company around. And they're looking at even segmenting some of their reporting segments as well, maybe spin off some of their segments. It's going to be interesting conversation on Intel. Obviously, Intel had a horrific earnings report recently. They're trying to recover. That's going to be an interesting story to track over time. Also, Alibaba in the news a little bit. They are one of the Tackle 25 components. Alibaba's in the news as the shares rose because Chinese regulators announced that they are now completing their 3-year regulatory recertification process. That's something that's been a little bit concerning on a lot of these Chinese components, making sure that they're reporting their earnings that are based on U.S. standards of transparency and accuracy. Alibaba confirmed that they went through that recertification process, and that is through the market as well. And that's what we got for stocks in the news. Like I said, had a little bit more than we typically talk about and tackle today, but we're not having a lounge here today, so I wanted to get the stocks in the news through.
Yeah, crypto and commodities down across the board. Let's start with gold, who has its own consolidation pattern that it has been developed over the last couple of weeks. Clear resistance level, giving up the 9. I know from a long-term perspective, this is just a technical thing, but labor market data next week as well. I just cannot see any of these major markets holding these ranges. They're either going to break up or break down next week on labor market data. What are you seeing from a technical perspective?
Yeah, rinse and repeat the S&P 500 conversation. Resistance is tough to break, and we see resistance hold here again on gold. But again, it really doesn't change the pattern for me. You're talking about a breakout at this point. You're talking about a breakout in the S&P. So you just got to be waiting on a breakout. And if it doesn't break out, the path of least resistance is a pullback.
Yep, and we go through seeing a general weakness. Just fire through the rest of the commodity charts for us from a technical perspective.
Yeah, a little bit of pullback analysis here in silver, as it did try to get up and go, and now you're looking at a little bit of pullback. Look at that 29 level. That's right where the 20-period moving average for a little bit of support. On the copper side of the equation, still hovering around that 4.2 level, still kind of tracking between the 50-period moving average and the 200-day moving average. That's a breakout situation above the 50-period moving average. bearish on copper. And a lot of what's happening in the commodity market here is because of what the dollar's doing, quite frankly. Commodities are going to pull back when the dollar starts to go through bearish retracement. I wouldn't get too concerned about the commodities pulling back here unless the dollar starts doing something a little bit on the deeper retracement side. But this is just a technical move on.
It feels like an oversold bounce.
That's all you're seeing is you're seeing an oversold bounce on the dollar. The dollar strength over the last 3 days is impacting the commodity space. And so that's really what's happening. So the question is, all right, what happens to the commodities if we confirm this bearish retracement on the dollar? That would actually be a really good look for the commodities in that environment. So I'm not going to get too concerned about them simply because the dollar's retracing here.
Now, listen, we got a lot of work to do in the Tackle Trading newsletter that we will be releasing in a few hours for our community. Great time to sign up for that free trial. You get the newsletter, join us in the lounge. Go to tackletrading.com, sign up for that 15-day free trial, and check out that newsletter this weekend.